What's up, guys? I'm Mike from StockedUp. In this episode, I have a very interesting spread to show everyone today. This spread, not too many people know about it. It has a pretty low chance of winning, but it has some insane risk to reward ratios. Like, for example, in the examples that we're going to be looking at today with AMD, you can risk $7 to make 93. Sometimes you can risk $5 to make 100 and whatever. So it has some pretty crazy risk to reward ratios, and it's really cool, and not too many people know about it. Yeah, I'm excited for today's video. Just so you guys know, this strategy has a pretty low chance of winning, but when you win a lot. So I just figured I'd show everyone today. And then also one more thing is you have to have spread trading enabled to be able to perform or use this strategy. You cannot be on a cash account. But let's get right into today's video. So like I said, we're looking at AMD. And I'm sure a lot of you guys already know this, but if you think AMD is going to go up, you can buy a call option, and if it goes up, you can make some great money. If you think AMD is going to fall, you could buy a put, and if it falls, you can make some great money. You can even do some certain spreads like credit spreads where if AMD is below $92, then you make money. And you can do a lot of different cool things like that. But not too many people know about predicting like the exact exact levels AMD will be at. So instead of just saying AMD will go up or AMD will be below 92, there's actually ways that you can predict like AMD will be at $92 by expiration, and that's what we're going to be going over in this video. Obviously, it's hard to predict like the exact areas where your stock will be, but I just I want to show everyone this strategy because the risk-reward ratios are insane. So we're going to be looking at two different examples in today's video, one on the call side and one on the put side. So let's say we look at AMD's chart. And let's say, we see it trending up, and we think by Friday, expiration, December 4th, we can see AMD at 90 bucks, right? So we go over to the chain and we sell two of whatever price we think AMD will be at by expiration. So for example, we think AMD is going to be at $90 by expiration. So we're going to go ahead and sell two of the 90 strike calls. And then you're going to buy the one option above it and the one option below it. So we're selling two of the 90 strike calls, and then we're buying one 89 strike call, and we're buying one 91 strike call. Then we can see we're paying a debit of $7. So we're paying $7 to get in this. The max profit on this trade is $93. And we would make $93 in this scenario if AMD closed at $90 by expiration. Let's say it closed at $90.01, then we would make $92. Let's say it closed at $89.98, then we would make $91. So that's how that works. And you're probably thinking, who knows exactly where a stock price will be by expiration? And that's a great point. It's really hard to predict where a stock will be exactly by a certain time, but that's why the risk to reward ratios are so high. And like, for example, we can see that we see like the total risk graph right here. So like the break-even price would be right around $89.07, and the other break-even price would be right around $90.93. So for example, you don't have to predict the exact penny it's going to be on. So you don't have to predict that it will be at exactly $90. You can make a prediction even with this spread, even if it closes at let's say $89.60, you'll still make 50 bucks. So that's just kind of how it works. There's different analyzers, like options risk analyzers, kind of like I'm using now on Thinkorswim. There's free versions of those online. You can just type in the exact spread. I think one is options profit calculator and things like that. But some cool tricks is let's say you want a wider range. Maybe you might be thinking, all right, I don't know that AMD is going to close at exactly $90, but it might close around there. You can widen the legs on this spread. So instead of selling or buying the one option above 90 and the one option below 90, you can buy a couple different strikes out. So let's say instead of buying the 89 call, we could buy the 87 call, and then instead of buying the 91 call, we can buy the 93 call, and it just has like a wider risk level. And with that being said, the profit potential is smaller. So you'd have to put up $55 to make a max profit of around 240. So let's look at another example. So I'm not trying to get too complicated here. I know some of you guys might be a little bit confused. It's a little bit of a complicated spread. But like let's say we thought that AMD might fall down to $85, right? And the most realistic way to use this is not going with the one spread or the one with leg, you should say. So like a very realistic purpose would be if we think AMD is going to fall down to $85 on Friday, I would just go over to the 85 straight calls. I would sell 2 of them, and then I would buy a couple strikes out. So instead of buying the 84 puts, I would buy like maybe like the 82 put. So I'd buy 182 put there, and then I would also buy an 88 put right there. So, and then if we go to the Analyze tab, I would be risking $76 to potentially make 213. And it's not like you own, it's not a binary event where you either make 213 or you lose 76. Like for example, like you can make about $100 if it's at about $83.78. So like I said, this is called the options butterfly spread. I just wanted to show to everyone, not too many people know about it. It is one of the riskier spreads. It's more of kind of a gamble than anything else. So please be cautious if you do use this. But some last things to keep in mind is that you do need spread trading enabled. You have to be able to obviously long options, but also short them in a spread format. Personally, I'm on Thinkorswim right now by TD Ameritrade, but if you're having trouble getting like the risk analyzers, kind of like right here, they are extremely helpful. They'll show you exactly where your break-even points are. You can see like the profits and the losses right there. Robinhood does not have one of these to my knowledge, but there's a lot of free versions out there. Like I believe Options Profit Calculator has one for free, and there's a lot of different ones. So I hope this video helped you guys. If you guys have any questions on how this spread works, or if you guys want to see me go over any other advanced topics or spreads or calculations or anything like that, let me know in the comments down below. But other than that, thanks for watching.